All right, joining me is Gabor Gurbacs, founder of Pointsville, which is an infrastructure provider to some of the largest financial and crypto companies in the world. That includes converting real world assets into tokenized assets. And we'll get into all of the details of that. I should note that Gabor is also a chief strategy advisor to Tether, who, of course, offers the world's largest stablecoin. And I should note that previously, Gabor was director of digital asset strategy at VanEck. And it's funny, I can remember connecting with Gabor literally 5 or 6 years ago when he was working overtime to bring a spot Bitcoin ETF to fruition. That seems like decades ago. But Gabor, welcome to the podcast.
Hey, Nate, good to see you.
By the way, we can talk spot crypto ETFs later if you want, but I have to ask you, do you miss those days at all? Like fighting with the SEC trying to bring a spot Bitcoin ETF to market?
Yes and no. I've lost a lot of hair, about this much, on that fight. Work with VanEck and on trying to get the first Bitcoin ETF approved, and VanEck was the first asset manager to file for a Bitcoin ETF, and we fought a good fight. And today, I believe there's more than $150 billion in Bitcoin ETFs. The crypto market is over $3 trillion, maybe closer to four, depending on the day. And so I certainly appreciate that we got it done, and miss it in some ways, but I'm also very happy that regulators are now appreciate the capital formation piece of digital assets and the transformation potential that it offers to capital markets. And a little bit of regulatory clarity. The Genius Act approved spot Bitcoin ETF is extremely helpful. So I guess the long-winded answer is that I do not miss it. It was worth the fight. And we have really, really good results that created a $4 trillion market and growing.
Well, I'll just say you have significantly more hair than I do. I've lost a lot of hair just following this saga over the past 5 or 6 years. So I think you're doing pretty well. Okay, so let's talk about Pointsville, and I think that'll get us down into a discussion around tokenization. But do you want to explain that business and how it does tie into crypto?
Yes, definitely. So again, I spent my past 13 years on the intersection of Bitcoin and ETFs and capital markets, building tools, and Pointsville was born out of that fight. The Bitcoin ETF fight. What will assets look like in the future? So Pointsville was built to answer the question. The two things that Pointsville does today is, one, quietly provide infrastructure to the largest crypto companies in the world and financial companies to build their own tokenization engine. And on the other side, we're working with more interesting new age legitimate assets like sports assets, loyalty points, to help people use those points better, transact with them, and use them as financial assets. So Pointsville is the quiet infrastructure provider that enables some of the largest platforms and companies in the world, like Tether, Fanatics, Major League Baseball teams, and so on.
Okay, so talk more about that last piece on the loyalty side. So, for example, Pointsville does have a partnership, as you mentioned, with Major League Baseball teams like the Pittsburgh Pirates, the Phillies, the Astros. Explain what those partnerships look like.
Yeah, so our partnership with Major League Baseball teams is very simple. We help them, provided them the tools to create, manage, and issue their loyalty points. As crazy as it sounds, sports teams did not have those tools before. And even if today you walk into a large grocery store or airlines, they manage their point system manually. There's not really much systematization to it. And at the beginning of COVID, when there were no one in stadiums, we realized that there's an opportunity to get in front of people electronically and eventually help them come back to the stadium. So we created electronic wallets, we created point systems and rewards to help people come back to the stadiums. And so currently, if you are using, like if you go to one of the MLB stadiums, you mentioned like the Phillies, Pirates, or Astros, you'll get your points through our platform. And then you can use your points to do cool stuff like meet a player, have your kid announced at the ballpark, and so exclusive things that otherwise wouldn't be available for loyal fans. And you can also do things like buy a hot dog or get discounts, and in some cases get fan cash back and things like that. So we built the entire rail for issuance management as well as commerce in sports with our toolkit. And MLB was and the Pirates specifically were our first customer, and we were very excited about that relationship. Yeah.
And so, just so I understand, is this a separate application that somebody would download and access, or is this built within the Major League Baseball app? Like, how does that work?
So we're actually the first applicant. So we were built into the Major League Baseball ballpark app, and you can log in with your, if you have a MLB profile and you're a fan of, for instance, the Pirates, you can just log in and see your points within the MLB app, and there's no separate logins that are required. That was one of the problems that we solved early on, because if you're a fan, you don't want to download 5 different apps to do, loyalty here and then concessions there. And so we're very excited. We took the approach, and that's our approach, our company too, that we quietly build ourselves into applications that empower organizations like Major League Baseball, Fanatics, Tether, and others. And again, just help make their products better.
Okay,
Yeah.
so that's the loyalty side. Let's talk about the tokenization piece. And I think that's where, again, we'll have a much deeper conversation. So, in terms of tokenizing real world assets, just explain what that process looks like at a high level, like how your platform helps facilitate that. And I do think it might be good for you to explain real world asset tokenization in general. I think most people understand that, but I never take the basics for granted. So maybe you can talk about that as well.
Yeah, definitely. I think just generally speaking, what we do on real-world asset tokenization is representing any asset of value in the format of a token, usually stored on a blockchain. So you can, there is, right now, if you go into your brokerage app and you buy a mutual fund or ETF, that you see a ticker, and those are basically centralized ledger entries. And we replicate the same process for a new type of instrument, but on decentralized ledger. So that's what tokenization is. It just issue something on Ethereum, and you create a new ticker for a new type of instruments, but without all the plumbing that you need for it in the traditional sort of like markets. And what this looks like is a person goes to a platform, and again, we create various white label platforms for different companies like Tether, large banks, even sovereign governments, so they can issue their own bonds and assets. So all you do is basically, you go to the platform, you say, I would like to issue a bond. And then you type in the ticker, you type in your coupon rate, you type in your payments frequency, attach your prospectus and key information documents that you need to legally issue those assets. So again, just highlighting that you cannot ignore the law. You still need to register your issuances, and then create the actual asset on the blockchain just a few clicks. So we made a very difficult process of issuing an asset very simple, and it takes about 3-5 minutes total. If you're good, it takes under 2 minutes to issue an asset. Very simple. You don't need to be a programmer to issue an asset. You don't need to do anything on blockchains. It's just a high school student theoretically, and you need to be 18 plus, or 21 plus, depends on your region, could do this very simply. And right now, like it's so simple, again, just as signing up for a website. You fill out some information about your asset, you upload a logo, and boom, it exists out there. And then you have to obviously go through the process of, okay, I want to list my asset, or I'd like to transfer my asset, I'd like to work with a market maker. But the platforms that we built even allow you to create sort of like guide you through a legal process of collecting information like business information, know your business, know your customer, and then later on know your transaction information in a very simple wizard way. The best example of this, and you can go to the website hedron.tether.to. That's a platform that my team has built. is there's videos and guides showing you on how this process works. On the Hedron side, past year, about 1,200 businesses signed up to issue tokens on the platform. Multiple sovereign nations, quasi-sovereign entities, large banks, technology companies, taxi drivers from Kenya, coffee farmers from Costa Rica, all kinds of, a mix of, I'd like to issue a $1,000 loan token and up to I'd like to issue a $1 billion bond. So those are the ranges for those issuances. And of course, we can talk about it later, but I think the big important piece of all of this is that basically we democratize asset issuance. A large portion of the world, 95% of the world, does not have real access to capital markets. And even financial professionals today, you walk into a bank or like an asset management company, I guarantee they cannot tell you how a bond gets issued. It's a mysterious process of, an issuer pushes some paperwork to a lawyer pushes some paperwork to an administrator, and the administrator talks to something called a transfer agent. The transfer agent talks to, again, the administrator, then the custodian. But it's a mysterious process that is not available for, again, a very large chunk of the world. So we're just simplifying the issuance process. And in this process, we're also making it 10 to 50 times more efficient, depending on what country you are, and that will have ramifications of what finance will look like the next 5 years.
So if I were to summarize your platform as you just described, it's really a one-stop shop to tokenize real-world assets. It sounds like it's a very friendly user interface. It's dummy-proof for the most part, which I think is good for somebody like me. And obviously, you're also being mindful of compliance guidelines, KYC, those sorts of things. I guess the one question I have, what about the underlying blockchain? So when somebody goes on the platform, they're going to tokenize an asset. Are they selecting an underlying chain? Like, explain that.
Yes, we support the top 11 blockchains that where most commercial transactions take place. So the platform is chain agnostic, and our plan is that blockchains are sort of like fundamental transport layers and databases at the end of the day. We don't want to really bother our customers with the complexities of blockchains. It's just handled in the back end. Very simple to interact with them, but we do support the largest ones like Bitcoin's Liquid Network, Ethereum, Tron, Solana, Ton, Avalanche, Aptos, and so on. All of those are supported on the platform, and we are adding the most dynamically growing ones over time too. But our vision of the future is that when you issue an asset or when you look into your mobile wallet, you shouldn't bother with long strings of code and public and private keys and copy and paste and maybe lose half of your fortune doing it. It should be simple and intuitive and sort of behind the scenes, and that's what we have simplified for the issuance piece.
Okay, so when I think about tokenizing real world assets, I'd love to hear why you think that's important. Because as I'm sure you're aware, a number of our friends in TradFi, they're still very skeptical here. They don't see this as a meaningful upgrade from, say, ETFs, as we were mentioning earlier. So how do you like to paint the benefits of tokenization?
Yeah, definitely. And I also wanted to give you an analogy. Like when I started working in ETFs was not long ago, 13 or 14. Once we had a discussion on, so I was just involved in I can't not remember this, but like just I'm not going to name the bank, but we talked to a large bank and the large insurance company on the same day, and we recommended a simple bond exposure for emerging markets to be considered for a portfolio allocation. And they looked at us like we are some heroin dealers or something. This was 15 years ago, not even 15 years ago. So ETFs were maybe a little bit over $1 trillion asset class at that time, and very unusual. Everyone's using mutual funds and hedge funds. And today, ETFs are, if I remember correctly, global. It's about a $20 trillion industry. Everyone uses ETF. It's a go-to place. And again, just to give you the answer on tokenization, I think a little bit of history. Basically, we have seen stocks and bonds being pulled into pooled investment vehicles like hedge funds. And then hedge funds were sort of mysterious, and you're the manager who was giving you a strategy, and they had an edge of something, and they charge you large fees, of course. And then they got simplified to mutual funds, and then index tracking mutual funds. They were basically a little bit more transparent. They were faster and better and cheaper. Then ETFs came along. They were certainly more transparent. You see a daily NAV, you see daily ETF holdings, and then trading 5 days a week, and more transparency, better, faster, cheaper. So the question is ETFs the end of the world? Is it the most efficient tool there is? And the answer is no. We'll see tokenization and tokenized assets being the next generation or next evolution of ETFs. And what happens is the same better, faster, cheaper story. You'll see 24/7 trading, lower transaction fees, the entire gutting of the DTCC model and the intermediary model. That is, there's 10 levels of intermediaries that are not adding any value to issuance, and technology that is 50 years old now, and processes that are 50 years old. So again, what will happen is just that whole stack gets simplified. Costs will be even more efficient than ETFs, because at a face value, ETFs look cheap today. But the process of issuing assets, the process of holding them, the intermediaries in the chain actually are adding costs that are unseen to the ETF holder, and complexities and risks. So again, that is what gets fixed. So the benefits of tokenization is that this is the new structure. 10 years from now, we'll see, just like with ETFs, by the way, the prediction is that by 5 to 7 years from now, we'll see $30 trillion in tokenized assets. I would not be surprised if that happens, just looking at our issuance pipelines. The CEO of BlackRock said he's going to tokenize his entire business. He knows that his ETF business is getting disrupted. Same with other large managers. Fidelity is looking, obviously Tether launched a tokenization platform. So again, it's just a better, faster story, more real-time settlement, more efficient automated tax systems, simplifying the current model. And the interesting piece of this is that actually emerging markets countries who don't have this complex of a system have an advantage, because they'll just adopt a new system. They don't have to revamp their intermediary system, their transfer agents and administrators and depository and trust corporations equivalents. So we'll see sort of like a mobile moment in emerging markets. So people will skip adopting a landline phone, or the landline phone equivalent of capital markets, which is what we have in the US and large developed countries, and they'll jump into this more efficient system. One example I can give you is El Salvador, for instance, has adopted laws that securities can be tokenized, and they're considered tokens. And so all the benefits that go into the quick issuance, transfer, distribution of tokens is codified in law. So they start building an entire capital market system based on this new system. And the neighboring countries are looking at it. And actually today, 25 central banks are studying that model. And I advise some of them on that. But yeah.
It's a really interesting point regarding emerging markets, and that you're right, they don't necessarily have all of the middleman and the infrastructure built out, and so it's easier for them to move to a tokenized world. I'm curious, are there other broader macro drivers like that you think will lead to greater adoption of or interest around tokenization? So if we set aside the benefits, obviously the benefits will be a key driver, benefits of tokenization, but are there some other broader macro drivers at play here?
Two points that come to my mind, and maybe two and a half really. One of them is population related. So a third of the world is under 19 years of age, or under 20 years, let's just say. Another third of the world is between 20 and 40. And so what happens naturally, skipping the initial first year, is that every 12 to 15 years, an entire generation of people become of working age, one. And then usually every 12 to 15 years, a new paradigm in technology drops. So for instance, like if you look at the past 15 years, and particularly the last 5 years post-COVID, almost no one used mobile wallets and payments, right? Like it was just your pay with your credit card or your pay with cash. now almost everyone uses mobile wallets and payments. People pay from an Apple wallet, their crypto wallet, their Tether tokens, whatever it is. So that's been this transformation has been basically driven by digital wallet natives, and it's part of that. Every 15 years, roughly, tech and population becomes basically the next. Young people become both wealthy and they bring their technology into that 20 to 40-year-old age, and they buy assets differently. So like there are a lot of people in emerging markets, they don't know what a Vanguard or Fidelity or whatever Schwab brokerage account is, and they will never have one. But they have a crypto wallet and they want to access investments in a way that they know how to buy. So I think this sort of like the just the young digital natives becoming wealthier is one topic, and this is particularly in emerging markets is really noticeable. So Vietnam, Indonesia, Brazil, all are countries where these people are both becoming like just technology brings them value and they're becoming wealthier. And then at the same time, there's a generational wealth transfer going on. By 2030, between 30 to 68 trillion dollar, depending of sort of how you look at it, gets passed down to this younger generation who is using different technologies. So they're both earning, they're both inheriting a lot of money. Inflation is happening, and so this new generation of people, and particularly around emerging markets, is just will have crazy more spending power, and that's what's driving the adoption of USDT and Tether tokens. That's what's driving the adoption of crypto and electronic wallets. And again, in the US, actually, we are quite behind of Asia. If you travel anywhere in Asia, people are just like, they already have assets in their wallets, and it's already linked into social networks. And again, this is just happening in the Americas now too. And again, my bet is that tokenization is what will give access to all these people to investments.
I love the point on younger generations, and I'll give you a quick story on the TradFi side, which I think you'll appreciate. I think, as you know, I run a registered investment advisory firm, and we have ETF portfolios. And for the longest time, we had an allocation to gold ETFs. And we started hearing from younger clients, well, why do we own gold? I don't want to own gold. I want to own digital gold. And that sort of got us down the path towards looking at spot Bitcoin ETFs. And as I thought about that, that honestly made me step back and go, regardless of what your thoughts and beliefs are around crypto at large, if you're an advisor, you better be prepared to have intelligent conversations, particularly with younger clients around crypto. And you made your second point just regarding this huge, massive wealth transfer that's taking place. If you talk to anybody who is in that younger cohort, I shouldn't say anybody, but many people, they have an interest around digital assets, and they're very comfortable with digital wallets and transacting in that ecosystem. So I think it's a really good point, and it's one that maybe seems obvious, but I do think it gets lost at times, and I think that's a huge tailwind for tokenization. They don't see this as it's just normal to them to operate with digital assets. So I love that. By the way, I meant to ask you earlier, and I think you alluded to this. What was the backstory on founding Pointsville? Like what made you decide to launch that? It was back in 2020, correct?
Yeah, definitely. And just to your early advisory point, I think people are lucky to have you as an advisor. We've been talking about this space for a long, long time. And I think like, if anything, from your also, I'm a big fan of your ETF podcast from sort of like the previous era and discussions and how this evolved. I think it's evolving real time, and I'm glad that you're tracking this trend, and glad that advisors are more open about generally crypto and digitization, because again, it will be a big asset class, and those who are not talking to sort of younger clients about crypto are kind of losing those clients. So I get very glad that it's not taboo. When I first talked to advisors in 2014 or 15 around crypto, out of like a room of 300 people, like basically 3 or 4 heard about crypto, and basically no one owned it. I think now it's a different story if you look at it, or client portfolios.
We're slowly getting there, but I appreciate the kind words there as well.
Yeah. So the founding story of, again, Pointsville is a few things. We saw an opportunity, of course, in sports, but simultaneously we also worked on some tokenization efforts in financial services. So before COVID, actually, maybe a backstory. So 2017, there was this crazy ICO boom, right? Like, and before that, Bitcoin first hit 1,000, and people started looking like, what is this? And suddenly all these new tokens have been launching, and layer one and competitors to Bitcoin. And we went from like basically 30 tokens to 1,000 tokens in 2017 to basically 100,000 in 2018. So that ICO boom, most of us have been very disappointed with on the financial services side, because it's like people are launching crap. They're dog coins and cat coins and cats and hats, and and the tokens were distributed to, my uncle owns 60% and I own the other 40%, and then maybe we distribute 10% to the community, and that was the model, and none of them were registered. So I was hoping that in 2017, at which point I was in the Bitcoin / crypto space for a long time, that there would be a real world asset boom. I was hoping that ETFs and stocks and everything would be tokenized. There were some businesses out there, but they were not doing the right thing. So we decided during this ICO boom that we're going to do something that focuses on fundamental infrastructure, harnessing the best qualities from these new types of assets, and those are like the distribution of these networks. These are all networked assets, so you don't have to be restricted to a brokerage. You don't have to be restricted to a bank. So there was a very attractive quality. The wallets were digital and electronic in nature, so it's easy to hold those assets. You can fractionalize things and can have 8 decimals in the tokens. You can buy really small quantities, send really small quantities, relatively inexpensive to send these tokens. So we wanted to do something like that with assets for a long time. It just took a while to put together the team, and regulatory environment has been very difficult at the time. Even a Bitcoin ETF was controversial, let alone saying that, hey, I'm going to put the S&P 500 in your pocket, and it's not going to have DTCC behind it or any of the stuff that you're used to, but it's going to be completely different rails. But I think there's way more openness now. So that was the founding story, and we doubled down during COVID, and we have the sport use case was very imminent because there were no fans in the stadiums. Loyalty had a very clean and clear regulatory status in the US, so we started focusing on that, and then stablecoins ended up picking up, and then we realized that riding with stablecoins and the new sort of like form of payment, which was USDT, it's the largest and most expensive. No, expensive with an A. Stablecoin will be beneficial for these assets. So like, the Hedron ecosystem, for instance, like when you issue a bond on Hedron by Tether, then you're raising money in USDT terms. USDT is the native currency of these new capital market structures. So that was interesting to us, and we just wanted to, having experience in the traditional finance space and having been the product person and issuing some of these ETFs and seeing the complexities of working with administrators, accountants, transfer agents, and so on. I wanted to make sure that we also preserve the best aspects of traditional finance. So we built something from a TradFi perspective. Like, we built something that is institutional grade, and traditional finance is also familiar with it, but also using the new tools that we've learned from stablecoins and other tokens and the sort of like the ICO boom. So that was it was a long backstory of basically I would say like 5 years of experience before 2017 and seeing the ICO boom, and then matching that experience with sort of like momentum. And wasn't like a spark that, oh, we need to do this right now. It was just a lot of building, and ended up becoming a company. And one of the things that I think we do differently than any others in the market is, again, we want Tether to be successful. We want Fanatics, MLB, and our banks to be successful. So we just do what we do best, which is building technology, as opposed to some of the other players who want to replace the banks themselves, want to replace the stable coins themselves, or the sports leagues. But those are age-old businesses and they will not go away. And so our approach is to empower them.
And did I see correctly that you recently raised a Series A funding round led by Valor Capital Group? I think there were some other investors as well. Can you tell us anything about that?
Yeah, we did raise capital, and we did a formal Series A for Pointsville, and Fellow Capital Group led that, and we had participation from Tether, of course, and then Itao's founding family, New Bank co-founder, Superscript, which is Temasek created company, and a few others in the space, like K2 Integrity, and which is sort of one of the big ratings families and companies. And so we try to put together the best of financial banking ecosystem from emerging markets, plus the best of crypto with real reach in emerging markets. And yeah, we raised $10 million. And then as part of the process, we are sort of put together a mini consortium to support this new generation of capital markets. So we're very excited about it. You'll hear soon more about this consortium that is coming up. It's basically a group of banks, sovereign wealth funds, asset managers, technology companies that are creating standards for issuance in this space. And again, respecting the laws and regulations and capital market norms, but also creating sort of the new generations of wrapper for investments.
All right, just a few minutes left here. I think I know the answer to this, but I'd love to have you talk about the total opportunity for tokenization. So, do you think we'll ultimately see every financial asset tokenized? Is that where this is all heading, or how do you think about that?
Yeah, so I mean, I think the consensus is that, or I mean, you can look at across the board, but basically, it's expected that $10 trillion will be tokenized by 2030. That's about half of what the ETS space is. And I personally see that all assets will be tokenized, and the question is where. You know, there are some of these financial transport layers, and everything gets modernized, and we just call it tokenization today. So, yes, I see most of financial instruments getting tokenized. And if you look at assets around the world, there's about $700 trillion in assets, about 300 of which is in real estate, and sort of like commodity type of assets are another 100, let's just say. And then financial assets depends who you talk to, like between 70 to $100 trillion. And then there's other real other types of assets in between, bonds and so on. But I think eventually, I think everything is going to be tokenized, and this is a transformation that banks and financial institutions have to really think about. Right now, when I started the digital asset department at VanEck, there was basically no digital asset departments at asset managers or banks. Now every bank has a team of digital asset experts, and they are mostly focusing on actually what to do with real world assets. They're less interested in crypto. Bitcoin is different because I think people are adopting it as digital gold, and I've been a long term proponent of that. But people are looking at more of the fundamental transformation of how to make the financial system better. And yeah, and I'm personally the other opportunity that's like not financial is we like this. There's this. My favorite stat is that if you don't generate $150 a year for a bank in some form, you're a bad client. That excludes 65% of the world automatically because people just can't afford it. And so that is why you have seen the monumental rise of Tether as a company, because that's the clientele. And if you look at capital markets, so access to raising money, access to issuing bonds or whatever instruments, very likely, again, I don't know the exact stat in here, but basically 90% of the world or even higher is excluded. So the opportunity set is that with new tech, you fundamentally empower people to issue assets, get access to capital, fund their businesses, and that is driving enormous transformations, not just in emerging markets, but just, more non-coastal America, just the Midwest, for instance. If you have access to capital and you have good talent in your area, you can now do anything. And so again, I think that's going to have a huge impact on where people live, how value is created, and it's going to drive and more people towards maybe different cities than than historically. So like the New Yorks and San Franciscos of the world, the Londons of the world are probably not going to be the growth epicenters of the world for much longer, because both capital and tech is going to be better distributed, and capital access is also increasing at other parts of the world. And again, that is actually driven by this type of technology, because you now can get paid for nearly free in stable coins. And once you start being able to raise money and use capital markets locally, that's going to just have fundamental implications on many things. So anyways, that's the
Well, let me
background.
ask you this. Let's assume you're right. The direction of travel is towards all financial assets ultimately being tokenized, which I agree with. By the way, I think that's where we're heading. Um, how do you think about the competition among the various blockchains when it comes to tokenization? And I know you mentioned earlier that you're chain agnostic, which I certainly appreciate. But I guess my question is, you've been involved in the space for a long time. Is there truly room for multiple chains? Is it winner take all? How do you view this? And this is something I've asked of, I feel like
Mhm.
nearly every guest on this podcast that I've talked about tokenization with. But I do think it's something that is very relevant. I think it's something people grapple with. How does this play out with all of these multiple chains? So what say you on that?
That's a very difficult question. I think that's why people have a hard time answering it, because there are already a number of chains out there at size that work, and they are used, but there is a chance that basically that the chain that will rule the future wasn't even launched yet. So I think, again, it's difficult right now. Bitcoin is the most established blockchain, and it is lately that now, like basically, we're actually the first platform to integrate Blockstream's Liquid, which is a Bitcoin-based issuance chain. There's Bitcoin-based issuance now via RGB, which is a protocol that allows you to issue assets, because Bitcoin was just a store of value. It was considered a store of value, but there's new tech that is built on top of it, and Bitcoin has the most regulatory clarity, the highest degree of adoption in the world. So I think there's actually an opportunity to build the entire financial system on Bitcoin. It was also fairly launched, so there's not a foundation that manages it. It's truly decentralized. No one controls it. So I'm actually very excited about that angle being possible, and I see more and more volume. In reality, it's like Ethereum, Tron, Avalanche, Ton, Telegram Open Network, and a few others are competing for most of the flow. And Bitcoin is not as big right now, but Bitcoin has the most regulatory clarity. So again, it's really hard to say, and that's why I think it's very important to be agnostic and really monitor what's best, what's most adopted. I'm working on a project to standardize the actual issuance standards of what are the characteristics that are necessary from a technical perspective, from a financial perspective, from a Basel III type of risk perspective for these assets. And I think in reality, once those standards exist and get socialized, more like it's actually a number of chains will be able to work with it. So again, I don't. It's like if you look at the history of the internet, it was winner take all, right? The TCP/IP protocol became the transport layer for the internet, but also it didn't get looked at for a long time. There are now competitors, and so again, I think there's room for improvement. Or Linux became the standard operating system and service system for the internet, and I still think that we haven't seen the winners yet. So that would be my answer.
Well, Gabor, I always enjoy visiting. Congratulations on all of the success you're having with Pointsville. It's fun watching you build this just after connecting with you on the ETF side, so many years back. But congratulations on that. And I certainly wish you the best of luck moving forward. Thank you for joining me.
Thank you very much, Nate. It was great to hang out.
That was Gabor Gurbacs, founder of Pointsville. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting cryptoprimepodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit cryptoprimepodcast.com for more information.